Just talk us through how hot this sector and why the dynamics may have changed this year.
Thank you. Well, I do think there was a confluence of events that made this all possible. I think, first of all, there was a change in the SPAC structure that really attracted higher quality SPAC sponsors putting these vehicles together, which is that historically, if you had a SPAC, shareholders could essentially vote to do the deal or not do the deal and pull all their money. And it was a very high risk proposition. The structure changed a bit about a year ago and essentially created a situation whereby when a SPAC identifies a target, you can actually have a rotation of the shareholders. People can vote yes for the deal, but still redeem their cash. And essentially new investors come in who are in favor of the transaction through a private placement at that time. So that really changed the whole dynamic because the risk of a busted deal went down, and that attracted a lot of high quality sponsors, Goldman Sachs, TPG, Fortress, former partners from KKR, Blackstone, and the like, all were attracted to the game. So it sort of upped the quality of the sponsorship.
I want to get into what this means for technology, because I know a number of the names have been looking to monetize or try and capture some of the value that they've built up. And effectively, SoftBank's had some problems. So what might have been a ready buyer in the private market may not be there anymore. Going public, or clearly quite difficult given this window of opportunity right now. It could quickly translate to volatility down the track just as you file the paperwork. So what does it mean for some of the big technology names having SPACs out there? Because Airbnb, as it was reported that it was going to be filing paperwork soon, this was touted as one of the potential options for Airbnb.
Sure. I mean, that's a very good point. Really, the one of the advantages of a SPAC transaction is that in a very private context, the SPAC and the technology company can negotiate a transaction, set a price, and completely agree and lock up the capital to do it before announcing. So you have none of that risk you have in the middle of an IPO, like we saw with WeWork or even with Casper that got done, but ultimately the pricing changed at the last moment because something was going on in the market or because someone decided they didn't really like the terms, and you end up having to pull the IPO or accept a very different price. So the SPAC offers the opportunity for these technology companies to achieve certainty before announcing. The other important thing about it is that a SPAC actually allows the technology companies to present their forward projections to the investors in a way they really cannot in a traditional IPO. So especially in an environment like we have right now with COVID, where everybody's 2020 numbers are very different than they expected, being able to discuss the future, which you can do in the private placement construct of a SPAC, is a very big advantage. And that's really what's attracted a lot of very high quality targets who might have gone public the ordinary way, but in this current environment really need to tell the story about what's happening in the future.